Good morning, everybody. It's Tuesday, November 19th, 5:24 a.m. Central Time. Grain markets are mixed this morning. December corn futures up 1 3/4 at 431. January soybeans down 3 cents at 10.06 3/4. December Chicago wheat up 5 at 5.52 1/4. December Kansas City wheat up 3 3/4 at 5.59. December spring wheat up 3 3/4 at 5.88 3/4. Let's start off with the Russia-Ukraine story.
Moscow has issued a dire warning following the United States' approval of Ukraine's use of long range weapons. President Joe Biden's decision to allow Ukraine to strike Russia with U.S. supplied long range missiles comes as North Korea joins Russia in its fight against Ukraine. It also coincides with Russia's massive attack on Ukrainian residential areas in recent days. Russia warned that the decision would escalate international tensions and further intensify the war. Putin also reiterated Russia's readiness to use nuclear weapons if needed. Experts believe the policy shift is being implemented too late and won't have a significant impact on the trajectory of the war.
There was an update to this story very early this morning. Bloomberg reporting at about 3:30 a.m. Ukraine hits Russia with Western-made missiles for the first time, and they're reporting on, I think, reports, of course, from the Black Sea. Ukrainian forces reportedly carried out their first strike on a border region in Russia using Western-supplied missiles as President Vladimir Putin approved an updated nuclear doctrine expanding the conditions for using atomic weapons. Putin signed a decree allowing Russia to fire nuclear weapons in response to a massive conventional attack on its soil, including by drone. Russia will view aggression against itself or its allies by a non-nuclear state backed by a nuclear power as a joint attack, the document posted online said. That follows a pledge Putin made in September to revise the doctrine. So when they say a non-nuclear state, that would be Ukraine backed by a nuclear power, that would be the U.S. or the West. And he's saying we officially, according to us, have permission to use atomic or nuclear weapons. So that's terrifying in itself. The markets will tell you a lot of things. And the markets will tell you this morning that I don't think we're headed toward World War III, at least not right now. If that was the case, you'd see a lot more movement in a lot more markets. As it relates to our crowd, this is a deal for the wheat market, potentially. Russia and Ukraine combined are projected to account for 13% of global wheat production. The bigger thing is that they're projected to account for 30% of global wheat exports. Russia's been kind of the price setter globally when it comes to wheat, and it's helped to keep a cap on global wheat prices, the wheat they've been exporting out of Russia. So if the trade thinks that these exports out of Russia in particular are at risk, yeah, it's friendly to the wheat market. Wheat rallied the last couple of days, and I don't know if this has, and I think it has something to do with Black Sea tensions. I don't know how much. What I'll say about this is that almost every time we've rallied on Black Sea tensions for the last year and a half, it's been short-lived and the market sells off. Could this time be different? I suppose it could be, but it's a wait-and-see deal. We're waiting on the next headline, but very interesting news this morning.
Soybean planting in Brazil is progressing at a rapid pace. According to well-followed private group Ag Rural, as of last Thursday, Brazilian farmers had planted 80% of the total expected soybean area, up from 67% the prior week. During the same week last year, 68% of the crop had been planted. Despite concerns about reduced rainfall in Mato Grosso and the southern part of Brazil, the crop is continuing to develop well. Ag Rural also reported that 86% of the expected first corn crop had been planted as of last Thursday, up from 72% the previous week and 80% last year.
So very quickly, Brazil's ahead of schedule with regard to soybean planting, where they started off slow. The problem for the soybean market, the soybean market has a lot of problems, but one of the problems is that there is no problem in South America. The rainfall is expected to be mostly normal over the next 10 days. There may be a dry pocket in the south. And if you look at rainfall versus normal, yeah, there'll be some areas that are below normal with regard to precipitation, but they're not huge soybean growing areas. You look at your Mato Grosso and places like that, it's going to be closer to normal. So there's just not a problem right now. The potential for a monster crop or a record crop remains very much intact. Looking at Argentina very quickly, they've got some rain in the forecast over the next 10 days. They had been dry, but looks a little bit better. So we just don't have a South American weather threat right now. And that's what would really get the soybean market going this time of year, would be a couple of weeks of dry weather in Brazil. And we don't see that on the horizon for the time being.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Commodities are not investable. I talked about how I'm an ag outsider, so I'll never be an insider. I didn't grow up on a farm. I'll never be a farmer. I don't own any farmland. And the way that you guys think about commodities and then investments, it's much different than the way I think about them. And I try to like go through and give you some examples, like why maybe holding commodities over the long term or over even the medium term, a year, 2 years, maybe that's not the best idea. And maybe there are some alternatives. I'm not somebody who likes to sit on this stuff for a year or 2 years. When it comes to my marketing advice, I'd rather kind of sell it, be done, look forward. I don't like sitting on 3 years worth of production. There are other things that I discussed as investments that might be a little bit better for you. We had a ton of positive responses to this video. Chris Barron's going to be on today. We're going to do a farm budget mailbag. Had a bunch of questions that came in from subscribers about farm budgeting, cost of production, how to reduce costs. That's going to be more of a not agronomic video, but a farm budgeting video, and there'll probably be some marketing stuff in there too. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation, no upsell. It's a piece of cake to sign up. You can do it on your phone with a credit card. We do Apple Pay, Google Pay, Cash App. Takes like 30 seconds. Every day, you'll get our morning email every business day at 5 a.m. Central Time. That includes all the headlines that we talk about here, a whole bunch of additional charts and graphics, all of my cash grain marketing recommendations, super simple stuff, just straight up cash grain marketing, no fancy futures or option strategies, very simple to follow. If you're looking for a simpler approach, if you need some help with your marketing, check this deal out, guys. Sign up this morning. I'll forward you a copy of this morning's email.
Recent rainfall across the high plains has significantly improved U.S. winter wheat conditions. The crop was rated 49% good to excellent nationally through Sunday, compared to 44% the prior week and 44% on average. The crop rating was the best for the week since 2019. Crop conditions in the southern plains experienced significant improvements. Week over week, the good to excellent rating in Kansas rose from 37% to 49%. Oklahoma went from 28% to 37%, and Texas saw an increase from 33% all the way up to 47%. The crop was 94% planted through Sunday, compared to 91% last week and 96% on average.
The trade clearly saw this improvement coming. It was easy to see. There was a lot of rain in the southern plains and also in the Midwest, HRW and SRW winter wheat areas. And I think we'll improve again next week because we've seen a whole bunch of rain just over the last 72 hours. A lot of Kansas, Oklahoma, Texas saw some rain, and those are big time winter wheat areas here in the United States. So yeah, it's the conditions are improving. I'm surprised. I think wheat's acting more well on the Black Sea tensions. It's not a ratings thing because the U.S. crop is improving.
Corteva is planning to unveil a new hybrid wheat seed that could boost yields. According to the company, the non-genetically modified seed has the potential to improve yields by 10% without using additional land or resources. Corteva plans to initially use the hybrid technology on hard red winter wheat. When compared to elite wheat varieties grown in dry conditions, research shows that the hybrid seed can yield up to 20% more. The hybrid seed is expected to be available in North America by 2027 and will be also sold worldwide. Since 1981, U.S. wheat acres have declined by nearly 50%, and production has fallen by roughly 800 million bushels.
Wheat's $5.50 on the board. Just what we need, right? Another 10 to 20% of additional U.S. wheat bushels. That being said, we get questions about this like particular topic from subscribers all the time. Joe, why is everybody trying to improve production? It's killing prices, and yeah, it is big picture. But from a microeconomic standpoint, like on your farm, what's the best way to reduce your production cost? It's to produce more. It's to increase yields. So when and if this comes available, everyone's going to do it, and we're going to grow more wheat, and it's going to be bad for the markets. But it's always been an arms race. It's an arms race to see who can yield more. Can you out yield your neighbor? Can you out yield your county? That's the way you make more money in a microeconomic standpoint. You want to try to get everybody on board nationally to reduce yields and improve prices. Have fun with that.
U.S. soybean shipments declined last week. USDA reported that 80 million bushels of beans were inspected for export during the week ending November 14th. The print was down 8.4% from the previous week, but up 33% compared to the same week last year. Corn shipments were near the upper end of pre-report expectations at 33 million bushels. The print was up 3% compared to the previous week and up 37% versus the same week last year. Wheat shipments were well below pre-report expectations at 7 million bushels. The print was down 44% from the previous week and down 48% versus the same week last year.
Solid week of bean shipments, well above the same week last year. The rivers improved. We're looking good. Seasonally, we've already kind of declined just slightly from our seasonal peak as we normally would. Your seasonal peak would occur in late October, early November, and then we kind of back off. So you're not going to see 2 million tons a week, a month or 6 weeks from now, I don't think. Now, maybe this year is different. Maybe some of these shipments are going to be made earlier because of the White House implications and the probability or likelihood of a trade war. But we're doing all right. And with regard to corn and soybeans, we're on track to hit USDA projections for exports. No reason to think that we won't. Corn, if anything, we might be above what USDA has told us in recent reports.
USDA reported a flurry of flash sales on Monday. U.S. exporters sold 30,000 metric tons of soybean oil to India for delivery during the current marketing year. Exporters sold 10 million bushels of soybeans to Mexico for delivery during the current marketing year. And U.S. exporters also sold 135,000 metric tons of soybean cake and meal to the Philippines for delivery during the current marketing year.
This is all good. Nothing big enough to really move the markets necessarily, though. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 52 cents to $1.55 higher. Feeders were 72 cents to 302 higher. Box beef was mixed. Choice ended the day at 307.28. That was up 3.94. And select ended the day at 275.45. That was down 69 cents.
The outside markets are fairly quiet, and as I mentioned, the markets are not acting like World War III began today by any means. U.S. dollar is just a little bit higher. The stocks are lower, but the S&P is only off 27. The Dow's up 260, which is just an average day now. Bonds are up. Gold's up $22. Crude oil is down 57 cents in the December WTI at 68.59. Have a great day, guys. We'll be back on Wednesday